welcome. And I'm quite pleased to have with me Mr. Simon Javier, who's country manager for Mastercard in Philippines. Simon, welcome.
Thank you very much for having me, Ravindra.
Great. So I'm gonna ask you a few questions, which is relating to if anyone would want to enter into a Philippines market, from a payments perspective, how what sort of experience one is expected to encounter, right? So before my first question to you, Simon, is how the payments industry has evolved in Philippines and what lies ahead into the continued evolution.
Okay, so Ravindra, before I speak to the payments industry and how it's developed, I do hope that your family is safe. You know, uh, Times are tough, and we just hope that we can all get through this together. So, just very quickly, in terms of how the payment industry in the Philippines has developed over the past 10 years. So, we take a look first at the landscape and regulations that have happened in the Philippines, right? So, initially, it was really primarily credit in terms of payments from the years 2000 to about 2008. So, you're looking at quite decent growth. Then, what happened in 2008, 2009, the global financial crisis. In the Philippines, however, it was not hit by the crisis per se. We were really hit more by inflation. And after about a year, you saw banks, local banks primarily, starting to open up in terms of credit growth. Though the credit growth was not really as fast as we had wanted it, and you could say not very inclusive growth, because what you did see was many banks were granting credit to people who already had existing credit. So, in light of that, the central bank, in partnership with the Senate at that time, they signed in 2009 the Credit Information Systems Act. So it's basically a bureau, a positive credit bureau, and this was signed as early as 2009. But because this took some time to grow, some banks decided to get together in partnership, and they spoke to a few bureau partners abroad, and finally they settled on TransUnion. And what happened was this really sped up credit growth from high single digit to low double digit in 2009, 2010 to about a 15 to 20% clip year on year. So part of the issue, though, was this was still not really fast enough to the excluded market. And debit and prepaid was really primarily still being used at ATM. So it was in the year 2015 that the central bank started talking about national retail payment system. And the framework for this was launched in 2017, 2018. So the three key points in the framework of the NRPS were interoperability. The best example of this is the one QR PH standard that they're pushing, as well as the ability to make payments into any bank. We'll talk a little bit more about this later. The second principle is the inclusivity principle, wherein regardless of size, the institution should be able to participate. And lastly, co-opetition, which is really a play between the words cooperation and competition, where the industry is expected to work together in terms of system resiliency and efficiency. But in terms of fees and value-added services, it was really up to the institutions to duke it out. It was also around this time that we saw the emergence of e-wallets and fintechs. And here we have the big two, Gcash and Paymaya. And what they really brought to the table was excellent UI and UX and filled the gap that the banks were not servicing. The timing of the framework and the result of it could really not come, it really came at a very opportune time, because what you saw was the pandemic happened. And because of the lockdowns here in the Philippines, where the lockdowns are very strict, it really limited movement of people. So initially, you saw transactions go down, but you also saw digital transactions skyrocket. And according to the BSP, In some areas, transactions went up to 5,000% in terms of growth. So real-time payments has gone live in the Philippines, and you are seeing transaction volumes hitting 40 million monthly just on the InstaPay rails. So for P2P, was the initial functionality which was launched, you see this growing very fast. Use cases such as proxy, wherein you only need to know the email or the phone number of a customer, is also live, and currently there are 5 banks currently participating here, with majority of the big players also going live in the next 6 to 12 months. Lastly, pay to merchants via these real-time pay rails will officially go live on September 27. So the past year and a half, the COVID-19 global pandemic has really accelerated the shift towards digital payments, with physical distancing rules becoming the new norm. Over the next few years, the Philippine government, in partnership with organizations such as Mastercard, will continue efforts towards building a cash-light economy that will also achieve inclusive growth.
That's great. So I think as you said, the pandemic has really accelerated and got you to a stage where one is poised to take the next leap. So where are the big opportunities, in the near term and the midterm future in Philippines?
Okay, good question. So to answer that, let's take a quick look first at BSP's digital payments transformation roadmap, wherein they laid out key areas wherein they wanted to grow. So first, they want to convert 50% of total volume of retail payments into the digital form. So there is therefore an opportunity for new players to offer faster and more affordable payment options that provide greater convenience to our customers. Next, to expand the financially included to 70% of Filipino adults by onboarding them through payment or transaction accounts. How is this achieved? Through more innovative and responsive digital financial services. Some examples are financial products and services that are relevant for consumer needs. The PhilSys, or the recently created national ID, enabled KYC so more individuals can access financial services. Ability of a next generation and settlement system to facilitate real-time processing of financial transactions of the banking public and of the Philippine economy. In this regard, MasterCard is partnering with BankNet to enhance the InstaPay solution with our real-time payments technology. The sorry, the immediate effect of this of real-time payments is very important for the financially excluded who find value in the reliability of having cold cash on hand. And this also enhances digital commerce, and people are really flocking now to the digital economy because of the real-time nature of cash-like transactions experience. So clearly, there are clear opportunities on NFC as well and contactless in transport, as this isn't quite widespread in the Philippines. The thing that we've seen in other countries is there are two components that are really needed for it to take off. First one is small ticket transaction sizes that you will typically see in either groceries or restaurants or convenience stores, drugstores. And number two, transport. So once this happens, we believe that contactless will also take off significantly. You see digital payments becoming more prevalent, and because of this, the need for cybersecurity solutions that secure these transactions are going to become extremely important. The trick will be, how do you balance fraud minimization with customer experience? Because you also don't want to create too many layers of friction for your customers. It'll definitely turn them off.
Great. So, and we are seeing some of these phenomena in the other part of the world as well, and you see a lot of scale-ups and unicorns in the making. Uh, and one of the expansion plans are growing outside of the country. So, if one has to look at Philippines, the new entrant, what sort of first opportunities exist? And I think you partially answered that. But
Yeah.
what are the challenges and the barriers they may face if they have to enter?
Okay. Okay. So for a very, very long time, the absence of a national ID system, it's really made the country's transition into a digital economy quite challenging. The good news, however, is the Philippine government recently signed the Philippine Identification System into law in 2018. So it took some time for it to get momentum, but as of last count, there are already 50 million individuals who have at least registered, 20 million individuals who have had their biometrics captured, 2 million ID cards delivered. So at least in terms of this picking up steam, it's getting there, but not yet quite where we want it to be. The Philippine Credit Bureau, which we also talked about earlier, and access to other data sets is also still majority credit data in terms of what is submitted by banks. It would be really great if other things, such as access to GSIS or SSS. What are these things? These are social security or pag-ibig. These are government housing contributions that your employer gives to the government. So this kind of data will definitely be extremely helpful in being able to identify as well employment or at least some level of income. And would definitely give confidence to lending entities. So currently, in terms of availability of information, it's still mostly credit data that's provided by the banks. And hopefully that's expanded in the near future. Now, the crux of the matter really in inclusion discussions is the digital divide of the population, which is really a shame because we have a very decent internet penetration rate here in the Philippines, as well as smartphone penetration rate. I think it's upwards of 60% in the Philippines. And what I mean by this are those who are financially excluded might not necessarily be thinking about how to do things digitally. And currently, their preference is still for face-to-face transactions. One clear example is bill payment, where currently a vast majority of bill payments are still done manually. In many cases, people are having to take time off just to arrange for these things. I recall myself, when there was a day in the month that I had to take time off from work just to do these household chores. So imagine for the everyday laborer or the daily wage earner, what this means. It means they aren't earning for those days that they take a day off. And separately, how is it that we're also able to convince SMEs or third-tier merchants that currently aren't being served by the banks or EMIs that going digital is the best way to go? So the challenge is how to convince them. So aside from creating online platforms for them to sell their goods, it might be about building that ecosystem where they're able to get the benefit of riding on the network to get their next batch of orders or a better price or something such that in their eyes, they get a real material benefit from signing up for digital as opposed to just viewing it as an added cost.
Great. Simon, thank you so much for all the valuable insights that you have provided. I'm sure, organizations outside Philippines who have interest in Philippines watch this interview and find it very useful. So thank you very much for your time.
Likewise, Ravindra, thank you very much.